Hello students, I hope you're all doing well. Welcome to another video from QuickStudy. This video covers the economy and business from topic 1.5, understanding external influences on businesses. And in this video, we are going to learn about the different factors of the economic climate that has an impact on business activity. And these include unemployment, changing levels of consumer income, government taxation, inflation, and changes in exchange rates. Alright students, so firstly you need to understand that changes in the wider economy add to the level of uncertainties that are involved in starting and running a business. And in this video we are going to particularly discuss about the 6 factors that have an impact on your business. The first one being unemployment. So unemployment is when someone is of working age but cannot really find a job, and it's closely linked to the state of the economy. And if I had to give you an example, during the economic recession during 2012 and 2013, almost 20% of the 18 to 24-year-olds in the UK were unemployed. And you need to understand the kind of impact that it has on the companies. So first of all, essential goods producers, say for example people who produce toilet paper or soap, do not see as much of a difference. However, businesses which produce luxury goods will lay over staff during times of recession in order to cut back on costs. And what this does is that it creates a negative impression or a balance of trust between the staff and the management. Alright, now let's look at the effects of unemployment on businesses at large. So first of all, you need to understand that the effects of unemployment will vary depending on the economic climate and the types of goods that a business produces. So first, let's have a look at how it can be favorable for businesses. When unemployment is low, it means that people have more money to spend, especially on luxury goods like overseas holidays. And also at the same time, when unemployment is high, it means that there are more workers who are competing for a single job, which means that there would be less pressure from workers to ask for higher wages. And in both these instances, it's a favorable situation for the company, right? However, things can be different, and these two same situations can be unfavorable for companies. It's because when unemployment is low, it could also mean that there is a shortage of labor, especially skilled labor, which might also lead to workers asking for higher payments from companies. Whereas high unemployment can also be unfavorable for a company provided that there is a lower demand for luxury goods, causing many businesses to shut off their operations. Discuss the second economic factor which has an impact on business activity, which is changes in levels of consumer income. So what you need to understand is that changes in economic growth can significantly impact small businesses, especially those who are producing luxury goods. Now, what you do need to understand is that different products have different sales patterns, right? If I had to give you an example, in November 2008, car sales fell by almost 33%, while at the same time, the sales of e-bikes surged by nearly 50%. That's because they are both cost-effective as well as environmentally friendly. So businesses which specialize in the production of e-bikes realize that tough times can also equal boom times. And what well-run small businesses will do is basically save money during the good times so that they have extra cash flow for the downturns that are yet to come. Because during the periods of 2008 and 2013, there was a significant reduction in consumer spending because they did not have good incomes to begin with. And the retail spending recovery was essentially made during the periods of 2014 and 2015. And this was because of the reason of rising consumer income as well as more people taking on more debts. So what happened during 2015 was that there was a record of the number of car sales because it went up so drastically. And the data showed that 80% of all these cars were actually sold on credit. Now, what this means is that this is good, like in the short run, because this increases your sales, but there are other concerns too, because since so many people were taking on additional debt, it raises a serious question, like would they be able to repay it off in due time? Alright, now let's discuss the third factor which has an impact on the economic climate and therefore on the business, and that is inflation. So what is inflation? Inflation, by definition, means a generalized increase in the price level of goods and services. And this is measured in terms of percentage. What this really shows is that how much prices have increased in comparison to the previous year. Now, you need to understand the impact of low inflation and high inflation. So, when inflation is low, let's say for example under 2%, it is much easier for businesses to regulate the prices of their inputs like the raw materials. However, when inflation is sharply high or above 4%, what it means is that businesses have less control over their inputs and then their prices. So companies will feel pressured to raise their prices, but they are also concerned about how the consumers are going to react to these price increases. So what can the government do in these cases to make sure that inflation is under control? So the UK government, for example, has tasked the Bank of England with the job to keep the inflation rate in under 2%. However, we all know that this target is often missed. All right, now let's discuss the fourth factor which impacts the economic climate and businesses, which is changing levels of interest rate. Now, interest rate has a significant impact on household finances, and particularly the 7 million households with mortgages in the UK. So what happens when the interest rates rise is that mortgage payments will also increase, which means that families will have a difficult time to pay off their debts, which also means that they will be spending less on other activities. And this is not just people with mortgages, because people probably has other kinds of debts, probably credit card payments that they need to make, which means that they are not spending as much money on other goods, which leads to business revenues going down. Now, if I have to give you an example, for a travel agent, probably they do not have a debt that they do have to pay off. However, their target audience may have debts that needs to be repaid. Now, people will be spending less on vacations or overseas holidays and pay off their debts, which in turn impacts the travel agent's revenues. All right, now that we were just discussing about how the changes in interest rates can impact businesses, let's have a look at what kind of an effect it would have if interest rates were to go down. Now, a cut in interest rates means that there are significant benefits that the businesses can have. And there are primarily two benefits that businesses can enjoy. The first one being that there is an increase in consumer spending. Since interest rates are low, people will spend more on goods like luxury goods or entertainment and leisure activities. And this in turn means that there are higher revenues and profits for businesses. And this could also mean that businesses are actually hiring more people. And another benefit from lower interest rates is that there is a cut in borrowing costs. So since interest rates will go down, small businesses who usually tend to finance from overdrafts will see that their overhead costs have actually gone down because of lower interest rates. And thus we could say that there is a double benefit from a lower interest rate. While a business's revenues will go up, at the same time their costs will go down. And of course, the impact of a higher interest rates will adversely affect business, and the effects are actually the opposite of a lower interest rate. First of all, there is reduced consumer spending. Since interest rates are high, people would have to make higher payments for their mortgage or their debts, which means people have less or lower money left to spend on other goods and services, right? And this in turn would lead to businesses having lower revenues and lower profits. And at the same time, another problem with a higher interest rate is that there are the borrowing costs or financing costs for businesses has increased. So businesses who have loans would have to repay back a higher amount as interest payments. And this would mean that the business's profits are going down, which means that they won't be able to invest as much in other ventures, or this might also mean that they are hiring few people. So we understand that an increase in interest rates have a double negative effect. First of all, businesses are spending less money on investment, and at the same time they are hiring less people. Now let's discuss the fifth factor which has an impact on the economic climate, which is government taxation. So taxation affects businesses in both direct and indirect ways. Firstly, let's have a look at how direct taxes will affect businesses. So direct tax involves corporation tax. And corporation tax is a percentage of tax which is put on company profits after all the costs have been deducted from the revenues. Whatever amount is left is subject to a corporation tax. In 2016, it was around 20%. Now, if government were to raise this percentage of corporation tax, businesses might say that this would leave less money for the business to invest in their future operations. So businesses do not really want corporation taxes to increase, right? And then there are indirect taxes, which are potentially import taxes that the government might put on goods and services. Now, say for example, if automobile company Jaguar Land Rover were to import some products from Germany which were subject to a 10% of import tax, it would increase the cost of production for Jaguar Land Rover, right? Yes, and then there's another form of tax which is household tax, such as VAT and income tax. Now, this is the amount of tax that is placed on consumer spending and consumer income. And if this tax were to increase, it would mean that people would have less money to spend on goods and services. And this in turn could lead to lower revenues and profits for businesses. So it has trickle down effects, right? Now, however, if the government were to raise more tax revenue, it would mean that the government would spend more on goods and services, which in turn would also benefit the private sector suppliers. And now for the sixth and the final factor, which has an impact on the economic climate, is changes in exchange rates. Now, what is exchange rate? Exchange rate is the value of one currency against another currency. And if I had to give you an example, a stronger pound means that it is much easier for UK buyers to purchase American goods. And changes in exchange rates actually directly affect the cost of imported goods and can significantly influence business decisions on purchasing and pricing. Why does a strong pound really matter? So a strong pound means that it has a higher value in comparison to other currencies, for example, the US dollar, and it makes imports much cheaper. Now, what kind of an effect does it have on consumers? So consumers will or can mostly benefit from a strong pound. It means that whatever product that they are trying to purchase from, per se, America is now going to be much cheaper because 1 pound is stronger in comparison to one US dollar, right? And then there are potential problems with a strong pound that the British producers might face. Now, what will happen is if you are importing cheap goods from America because of a strong pound, now the same producer in UK will find it difficult to compete with you because their cost of production hasn't really gone down. And this could also mean that it has an economic impact. And so for the British producers, since they cannot keep their cost of production under control, it might mean that they are laying off people, right? And if the pound were to be weak, it would mean that the cost of imported goods would actually go up. And the sort of impact that it would have on the consumers is that now consumers have to pay a higher price for the same product because the value of the American dollar is now stronger in comparison to the British pound. And it can be a benefit for the British producers if the value of the pound is actually weak. That's because they can actually compete far better now in the international market due to the higher priced imports, right? Which can actually make their goods comparatively cheaper. And at the same time, British exports might actually now become more attractive to the foreign buyers because the pound is now weaker in value and the other currencies are stronger in comparison to the British pound, right? And this also has an economic impact. So while a weak pound actually hurts British shoppers or the consumers by raising import prices, it actually boosts the British producers and enhances export competitiveness in the global market. Now, here are some rules when you're doing exchange rate calculations. So when you are converting from pounds to a foreign currency, you need to multiply the value. And when you are exchanging from a foreign currency to British pounds, you need to divide. You see, following the Brexit vote, there were a lot of tourists who were coming in, and hoteliers were very happy about it because the British pound was weak in comparison to other currencies. However, at the same time, home builders were actually concerned due to a weak pound since the demand from foreign buyers was actually lower, which could actually affect construction jobs. And what you need to understand is that adaptability is key. No matter the economic climate, the business has to adapt accordingly. The better a company can adapt to the external influences, the more they are suited to thrive. And what you need to do is understand and respond to the economic shifts accordingly, and so that you can navigate these challenges better and seize the opportunities that come along the way as well. And students, with that, we have come towards the very end of this video, and to give you a short recap, this is what we have done so far. In this video, we have talked about the impact of the economic climate on businesses, which includes factors like unemployment, inflation, changing levels of consumer income, changes in interest rates, government taxation, and exchange rates. And students, I'd like to thank you for watching this video, and if you've liked this video, do subscribe to our channel since we post regularly on different topics and subjects that can help you ace your GCSEs. And of course, for more information on our online one-on-one tutoring services, do visit our website at www.quickstudy.uk. Thank you.